Welcome back to this week's Bitcoin price action analysis. My name is Josep Capó, and I am a trader and an author for the Brooks Trading Course website. We are going to analyze the weekly and daily charts of Bitcoin. Here, there is the weekly chart of Bitcoin, and before going deeper into what happened this week, which is very interesting, let's analyze a bit of the previous context. We have been discussing that the price action was delivering like 3 legs down, 1 pullback, 2 pullback, 3, and that the third leg is usually viewed as a late leg within a trend, especially after the leg 1 low and the second pullback closed the gap between this low and that high. Moreover, there was a breakout of this EMA, of the exponential moving average, which usually it is a prelude of a possible reversal. Now, the bears attempted to create a new low. They did a new low below the second leg down. However, they were not able to continue the trend. And we have been saying from this bear breakout that the likelihood or the selling there, it is usually better to be avoided because a reversal starts to become more likely, at least a couple of legs up reversal. Now, the price has been going sideways, and this week, as you can see, it is a huge bull breakout. We can call this bull breakout a bull surprise bar or bull climax bar. It is a very, very strong bull bar that it sets the market always in long. So there is just by one bar, if obviously the bar closes around the current prices, if the bar closes around the current prices, then this is a bull surprise, and with just one bar, the market flips to always in long. And why that's important? It is important because now the market, after 3 legs down and now becoming an always in long, there will be more chances for the bulls to get a couple of legs up. So bulls, what they want, it is a close near the highs. And if there is a close that left or leaves a prominent tail, then the bulls will likely buy a pullback, like let's say below the 50% of this bull bar. The target for the bulls, it is the start of the bear channel. So this is the bear channel. This is the first pullback of the bear breakout. So that's the ultimate bull target. Now, after a climax, if or after any surprise, the follow through is important. However, when there is such momentum, the likelihood is already that there will be at least a small leg sideways to up. One of the things that we have been mentioning is that there was a micro gap here between the low of this bear bar and the high of this bull bar that was weak. Weak means that one of the 3 bar patterns, if one of the bars is weak, especially between the bars that are the gap is measured, then the likelihood is that the gap will close. And we have been discussing here that the bulls were trying to close this gap. Now this gap is already closed. And now the bulls are attempting to reach this resistance, which is a lower high, and to break out that resistance to get to their target. Bears, what they want, it is a double top there. And what they want is that its bull breakout fails. They want a strong failure, because if now there is a small bear bar, for example, then that won't likely become the reversal of such a strong bull reversal or bull breakout. So they need a very strong bear bar. It doesn't have to be like that. It can be with a couple of consecutive good or strong bear bars. But if there is a reversal like that, then the likelihood will be a test down to this lower trend line, which is a wedge bottom, 1, 2, and 3 points, right at the $50,000 peak round number. So that's very interesting because now what I assume is that there will be more bull follow through and another leg sideways to up. Let's go to the daily chart. This is the daily chart of Bitcoin. We have been discussing this price compression. We have been saying that there were traders positioning themselves, for example, in the options market, buying and selling, buying either a long option and buying either a put option, betting that there will be a breakout at some point on any direction. The problem for this strategy, of course, there is always a trade-off, because if there is no trade-off, nobody will take the counterpart of your trade. Then the trade-off is that when you buy options, you are against the time. So the time is against you, and the more days that pass without a breakout, then the more value loses your option. However, if rapidly there is such a strong and huge breakout, then your option will be very expensive, and therefore you will have there your profits. It is very hard to know where there will be the breakout, but that's why normally people that do that, they assume that there will be many times where the option will just lose a lot of value, but sometimes you have such a breakout that it is worth the strategy. All right, we have been also saying last week that here there was a parabolic wedge bottom and a double bottom, and the most likely outcome was at least a small couple of legs up, some 3 to 5 days reversal. However, we were not expecting, at least at that point, such a breakout. Now, when we see that there is like this bar that is breaking well above the previous highs, now we know that there is something going on. There is momentum. There is like the tape is moving fast, and that means that traders are participating actively. Now, after such a bull breakout, then we need follow through, because if not, it can be just another failed bull breakout, and it can be a possible expanding triangle and a reversal down. So traders wait for follow through. Would many traders wait for follow through? I think this bar is good enough to, because the close is far away from the highs. The bar is as high as possibly all this range. So maybe it is good enough to just buy it. It is always relative, the follow through. If you have such a strong breakout, you can avoid to wait for the follow through, but you can of course wait for the follow through if you want to be more conservative. So here there is your follow through, and now the following slide will be some trade ideas to profit from breakouts. Remember that I am primarily a breakout trader. There are a lot of traders from the Brooks price action methodology that we trade breakouts. And the reason for trading breakouts is primarily because when you trade in the direction of the trend, then the management of the position is easier. For example, when you trade in a trading range, then you have to use wide stops. You have to be very reactive when the price action is telling you that there is a breakout on the way, and it is always harder to react. However, when you trade a breakout, let's say that you are buying here, you know very well that your stop is below there. Of course, you will manage your position if you start to see that the price action goes against you in a very annoying way. However, the way to measure risk is easier, and then when it is easier to interpret the trade management, that means that there is less requirement or less energy requirement for your side, so you can be more focused on the price action itself. So it is always the same. So now the market clearly after this bar is always in long. There is already two strong bars, but you can wait for the follow through, and then you can start buying there, no problem. Here there are some of the things that we call them like to measure the strength of the breakout. Some of the things are like there is uniformity within the size of the bars. The low of the bars are near the low of the bars. The open of the bars, sorry, are near the low of the final bar. Then the closes are near the highs, and that all are um, hallmarks of strong breakouts. We like breakouts because whenever we see that there is a strong breakout, a beautiful breakout with just such many strength factors, then the second leg up in the direction of that leg, in this case this bull breakout, this bull leg, it is highly likely like 80% or even more. So we love these kinds of patterns, and many traders we wait patiently until we see such a patterns evolving. Then that doesn't mean that you will be profitable, because then you have to set your risk, you have to manage your position in real time, but at least you are at the right place. So you are at the place to be in regards for trading. So I am not saying anyone that you have to become a breakout trader, but more often than not, professional traders are usually trend followers. More into this bull breakout, with here are some ways to enter. So you can just buy at the market at any time while you see that there is such of momentum. This is something that comes more with experience. The buying with momentum means that you see that rapidly there is a lot of velocity and distance done by the price in a short period of time, and you see that like something is happening. You look at the left and you see that there is a breakout of a structure, so you think that the context is not bad for continuing going on the direction of this move, so you can just buy at the market at any time. These bars are formed because someone was buying at any time because they were seeing that strength. Now you can buy this surprise or climax bar. Any breakout is also a climax. So whenever there is such a strong breakout, such a big bar in relationship with the previous bars, then that's a climatic bar. And if the close is around the highs and the context, because always we are context dependent, but in this case I think it will be good to buy at the close of this bar, or even just place a limit order to buy at the pullback of the bar anywhere, like for example the 50% of the bar. That could be also a good strategy, especially if there was a prominent tail. Then anytime while this bar is forming, there is like continuation, the bulls are continuing to buy, and you are seeing that because you see that the after the open, the price is just going up and up and up, and there is no testing down. The price is going up, so you can buy at the market anytime. Then you have the follow through bar, which is also a bull breakout and a strong bull breakout bar, and you can just buy the close. You can just buy with a stop order above. You can wait to buy also with limit order at 50% of the bar or below the previous bar. But after that, you have this bar. This bar is considered this third bar. It's like a gift. If you have bought here or on the follow through bar, then you see this like a gift. However, it is a third consecutive bull bar, and you can also buy it actually. So this will not be my preferred buy. I will prefer to buy lower at this point because the stop loss is far away. certainly, you never know how far it can go on the upside, but you start to see that this is very climatic. It is the biggest bar of this micro channel that has been increasing in size. So that's something that tells you that there might be a pullback underway. Anyway, if you buy there, it's not that bad, but you have to buy partially, and you have to be willing. You have to be willing to buy lower. Like you have to be able to wait for a pullback to happen, because a minor pullback is likely at some point of a 5 bar reversal at the minimum. So this is kind of, whenever there is a pullback, it can last for a week, right? This is the daily chart. 5 bars is almost a week, and therefore the type of pullback that bulls are expecting, it is not a very strong pullback against, but a two-legged pullback. All right, maybe it even reaches the 50% area of the pullback. The 50% area, it is always the most important area of any pullback. So it is the most important price after any breakout. So it is an area where you can also always, with educational purpose, you can you it is reasonable to look to buy at this area. Why? Because the second leg is likely, and likely means that is more than 50% chance. And if you buy at the 50% and there is more than a 50% chance, then you have one risk. You put your stop loss below the low of the whole bull leg, or below the low of this breakout bar. Both things are reasonable, and you just place your limit order there. You know that there is a 40% chance that the price will reach your order, and a 60% chance that you will reach again, test the high of the bull breakout. So it is a reasonable trade, and is mathematically sound. So this is why it is a very important price. Now, if you are a bull and you are not buying blindly normally, well, it is true that there will be algorithms that will the trading computers that will buy this 50% pullback, because they don't care. But computers have less edge than discretionary traders. They are better because in the sense that they take decisions without emotions. But if you are experienced enough in the discretionary and manual trading, you can anticipate scenarios that goes against. So a good discretionary trader has a better trading edge than an algorithm. And therefore, if you see that the price action is good for the bear, that is going strongly on the downside, like is breaking down strongly, then a discretionary trader will possibly remove the order and wait for a strong reaction before engaging. Or what they want is to see, especially like a couple of legs down, that bears never look always in short, and then try to buy, right? So the best that the bears can do, it is to achieve consecutive strong bear bars, and that means that if they do something like that, sometimes it is with a surprise bear bar. So sometimes it can be with 4 or 5 consecutive bear bars. So everything is relative. But if you start to see that bears take control of the short term, then the bull breakout is failing, and what is more likely now, it is not leg down. However, this scenario, it is not likely. So it is the less likely scenario, and there is probably so far like about 20% chance of happening. After a bear bar like that, well, the chances increases for the bears. So as the price action builds, the scenarios can change, and sometimes dramatically. But with the information that we have right now, that's this chart, then bulls are likely going to continue trading higher or making money by buying pullbacks. So before ending this video, I will of course recommend you to do not follow any trading advice or any trading analysis from others, but learn to trade by yourself. We are here to fill your gaps into your understanding, but our ultimate goal is that you can take this kind of trading decisions independently, and you don't need anyone to tell you how to trade. And that's you can achieve that, of course, doing the Brooks trading course by your own. It is a trading course that is designed for traders that have zero experience, but also for traders that has already an uh, intermediate trading skills. So whatever is your trading levels, do not hesitate to visit the Brooks trading course and doing the course. You have an affiliate link in the description. Moreover, as you have seen in my charts, there is an indicator that I use to identify inside, outside bars, and with a lot of more information that you can use on your daily routines or in your trading routines. And I hope you can find it in my website, josepcapo.com. All right, that's all I've got for you today. Thank you so much for watching this video, and I wait you in the next one. Thank you for watching.